I've been trading options for years, and I've tried out a bunch of different apps. Some of them have been great, some have not been so great, and one in particular has just been pure shit. So in this video, I'm going to be ranking 5 of the most popular options trading apps, and at the end of this video, I'm going to be giving an honorable mention to a new trading app that I might be replacing my current broker with. And the first app that I want to talk about is Robinhood. This is where you're going to find your typical Wall Street bets degenerate because Robinhood makes it so easy to trade options that a 5th grader could probably figure it out. Nobody can really compete whenever it comes to usability with Robinhood. And this is why it's my favorite trading app and why it's going on my A tier for best options trading apps. But a lot of people take issue with Robinhood because of the GME stuff that went down last year with them canceling the buy button, and also something known as payment for order flow. Now, Robinhood doesn't charge you a fee like other brokers do whenever you're trading options, but they take payment for order flow, which means that they're rerouting your order through specific market makers, and they get fractions of a penny for each trade that they put on, which doesn't sound like a lot, but those fractions of a penny really start to add up when they're doing millions of transactions per day. It's like that little 9 on the end of gas prices. And payment for order flow is a pretty questionable practice. It's banned in pretty much every country outside of the United States, and even here in the US, they're considering legislation on banning payment for order flow. And the reason why payment for order flow is so controversial is because the market maker that your broker reroutes your order through isn't always going to give you the best prices. But there is a solution to this if you pay a fee for each option that you trade, which brings me to pretty much all the other brokers that aren't Robinhood. And the first one that I want to talk about is my least favorite, Fidelity. Now, Fidelity is where you're going to find the old folks. This is pretty much the retirement home of options trading apps. And the reason for this is because it's so damn slow. I could probably place 10 trades on Robinhood in the same time it takes me to make one trade using Fidelity. And this is the main gripe that I have using Fidelity is their user interface. Not only is it super slow to use, sometimes it's even glitchy to where I can't see my investments or my options, sometimes I can't see my portfolio balance, and other times I can't type in the stock that I want to trade options on. So in terms of usability, Fidelity is probably one of the worst. And another issue with Fidelity is that they charge a 65-cent fee for each option that you open. So if you're trading a spread option with 2 legs, you're going to pay $1.30 for each spread that you open, and if you're trading hundreds of spreads each month, this can really start to add up. But in my experience when using Fidelity, the 65-cent fee really pays off because I'm always able to get a better fill using Fidelity than I would with Robinhood. I always place my limit orders just above the bid price, and on Robinhood, that order usually won't go through. But on Fidelity, I'll usually get more credit for opening the trade than what I put in for. But this is pretty much the only thing that I've liked about Fidelity. Everything else kind of sucks, and especially the risk management team. Another issue that I've had with them is upgrading my options trading level. Now, whenever you're trading options, you have level 1 and level 2, which is basic options trading to where you can buy and sell calls and put options. Then you have level 3 for spread options and level 4 for naked calls and naked puts. I was approved for level 2 options trading using Fidelity, and I tried to get level 3 options trading by calling their customer service, but I wasn't able to get approved for it. Which brings me to the next couple of trading apps in the B tier that are a little bit less strict on risk management.
SpongeBob, let me ask you something. Does this look dangerous?
And the first one is going to be Thinkorswim, which is the app that you see right back here on my screen. Thinkorswim is where you're going to find your typical Instagram entrepreneur bro. And this is actually where I got started with trading. I've been using this app for about 6 years now, and so far, I really don't have any complaints. Now, they do charge a 65-cent fee just like Fidelity does, but the user interface and the experience using Thinkorswim is miles ahead of Fidelity. And another great thing about Thinkorswim is that they have paper trading. So if you're brand new to options trading and you don't want to risk your actual money trading options, then you can start with a paper trading account using Thinkorswim. That way you're using your time instead of your money and developing the skill of options trading. That way later on you can put in actual money and hopefully make a profit. And another great thing that I've loved about Thinkorswim is the customization.
What does this button do?
You can pretty much customize the charts to your liking to where you can put up a bunch of different stocks on the same screen like I have back here. You can add a bunch of different studies for technical analysis, and the options are pretty much limitless when it comes to Thinkorswim. But if you're brand new to options trading, this can be a bit much since there's so much that you can change about Thinkorswim. Which brings me to my next favorite broker in the beats here, which is going to be Tastyworks. Tastyworks is where you're going to find your typical hipster barista because it's nice, it's new, it's sexy, and this can be a great place to start for new traders that are looking to get into options because they have tutorials on the platform itself to where you can learn about new option strategies. So Tastyworks can be a great place to get started, and they have pretty much all the customization that comes with Thinkorswim. But an issue with Tastyworks is they charge some of the highest commissions for each option that you trade. Now, Thinkorswim and Fidelity charge 65 cents per option you trade, but Tastyworks charges $1 per option that you trade.
$1.
So this means if you're trading a spread option, you're going to pay $2 since it's 2 legs. But if you want the user experience and the tutorials that come with Tastyworks, then that 35-cent fee might just be worth it. And all the apps that we've talked about so far have been for US users. And if you're outside of the United States, there's pretty much only one option for you, which is Interactive Brokers. Interactive Brokers, where you're going to find people using the metric system. Pretty much the only broker that's available worldwide for trading US options is going to be Interactive Brokers. And from what I've heard, they don't exactly have the best user experience because it's a little bit tricky for new people to get used to the trading platform. So if you're a new trader and you're outside of the United States, it's definitely going to be a bit of a learning curve, but hopefully once you've learned to use their platform, it should work pretty smoothly. And Interactive Brokers does charge a fee, just like most of the trading apps out there. And the fee that you get charged is going to depend on which country you're in and also how many options you're trading each month. So I'll give the breakdown of the fees on the screen. You can pause the video here if you'd like. But let's move on to our honorable mention to the new trading app that I might be replacing Robinhood with. I was recommended this app by Mikey Millions from Kamikaze Cash, one of my favorite YouTubers, and I trust this man with my life. Just look at that face.
Hello, Theta Gang.
And Aries is very similar to Robinhood in terms of user interface. It's almost a knockoff. And one benefit that Aries has over Robinhood is that they're not going to close your spread at 3 p.m. on your expiration date, which is a major problem that I've been plagued with when using Robinhood. They would always close my spread at 3 p.m. when I didn't want to close it, and I'd either be forced into taking a loss or getting suboptimal gains. But with Aries, you're not going to have this problem. They'll allow you to trade up to 4 p.m. on your expiration date. And another great thing about Aries is they can approve you for up to level 4 options trading to sell naked calls and naked puts. So the risk management team is a little bit looser compared to Robinhood and especially Fidelity.
Does this look dangerous?
If I do decide to change from Robinhood to Aries, I'll probably give a full review on it over the next couple of weeks. So be looking out for that. Thanks for making it all the way to the end of this video, and thank you to all my patrons for the support. And as always, remember to stay positive, stay green. I'll catch you in the next one.